Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings, and today we are looking at Nuvve Holding Corp's recent report. And let's just say they are trying to play offense while also avoiding a major penalty. So buckle up. We've got a situation here where a company known for its electric vehicle charging infrastructure is facing some serious headwinds on the stock market. This report focuses on a crucial notice from Nasdaq about their stock price and even their overall shareholder equity. It is not just about a falling stock price. It is about keeping their shares listed on the main exchange, which is super important for any publicly traded company. So, what is Nuvve Holding Corp all about? In simple terms, they are in the business of making sure electric vehicles can charge up, and they are also looking at how that charging can help the power grid. Think of them as a company trying to be a bridge between the growing world of electric transportation and the stability of our electricity supply. This particular document is a Form 8K, which is essentially an oh no or big news report that companies have to file when something significant happens. It is not their regular quarterly or annual financial report, but rather an announcement of important events. The main story here is a very serious notice from the Nasdaq stock market. That is the Nasdaq for short. They told Nuvve that their common stock price had dropped below $1 per S-hair for 30 days straight. This is a big deal because one of the basic rules to stay on the Nasdaq capital market is to keep your stock price above this dollar mark. Normally, if a company slips on this rule, they get a little grace period to fix it, but in Nuvve's case, things are more complicated. The notice pointed out that because Nuvve has done a reverse stock split, and actually multiple ones totaling a large ratio in recent years, they are not eligible for the standard time extensions to fix the low stock price issue. A reverse stock split is when a company consolidates its shares, making the price per S-hair go up, but without changing the company's overall value. It is often done when a stock price is very low. On top of the stock price problem, the Nasdaq also flagged that Nuvve might not meet a minimum stockholders' equity requirement. Stockholders' equity is basically what the owners of the company have invested, minus any debts. If this number is too low, it is another reason Nasdaq can delist a company's shares, meaning they'd be removed from the exchange. Now, here is where Nuvve is fighting back. They appealed this decision and requested a hearing with the Nasdaq's hearings panel. The good news is that this appeal stopped Nasdaq from immediately delisting them. And even better, on the 28th of October 2025, the panel actually granted Nuvve an extension. They now have until the 31st of December 2025 to get their act together and meet Nasdaq's requirements, however. And this is a big however. This extension comes with certain conditions and requirements that Nuvve has to meet. The company states they intend to follow their plan to regain compliance, but they are very upfront that there is no guarantee they will succeed. This isn't just a minor stumble. It is a critical juncture for Nuvve Holding Corp. Maintaining a listing on Nasdaq is vital for investor confidence and access to capital markets. If they fail, their stock could end up on over. The counter markets, which are much less liquid and visible, making it harder for investors to buy and sell shares. It is important to understand the implications of the low stock price. A stock price below $1 for an extended period signals to the market that investors are not valuing the company highly. It can make it difficult to raise money through issuing new stock, and it can even make it harder to attract and retain talented employees if stock options become less valuable. And that equity rule. If their equity is too low, it suggests the company might be struggling to cover its debts or that its accumulated losses are eating away at its capital. This is a sign of underlying financial weakness that needs to be addressed seriously. Now, we don't have detailed financial tables in this specific 8K filing, as its purpose is to report urgent news rather than a full financial picture. However, this filing implies that their financial performance has led to this precarious situation with Nasdaq. We'd need to refer to their more comprehensive quarterly reports, like their 10Q, to see the actual numbers behind why their stock price and equity are so low. But the fact they received this notice tells us the underlying financial health has been a concern for some time. These are the shares that most investors would own. The fact that the price of these shares has fallen so dramatically is the core of the problem. And then there are warrants. Warrants are like options that give the holder the right to buy shares of stock at a specific price. If the common stock price is too low, these warrants also lose their value or become much less attractive. So this issue impacts holders of both common stock and warrants. Nuvve is identified as an emerging growth company. This status gives them certain regulatory benefits, like a grace period for some new accounting standards. However, it does not exempt them from fundamental listing requirements like maintaining a minimum stock price or sufficient equity. So, what is our take on Nuvve Holding Corp right now? They are in a fight for their listing on a major stock exchange. The deadline of the 31st of December is looming. Their success will depend on their ability to execute a turnaround plan that not only boosts their stock price but also addresses any underlying issues with their equity. The conditions attached to their extension are key here, and we will need to watch closely how they navigate those. A fundamental strength is the electric vehicle charging market itself, which is a growing sector. Nuvve's technology is intended to help stabilize the grid with EV charging. The risk, however, is immense. If they are delisted, it will severely damage their reputation and their ability to finance future growth. A key opportunity for them would be to successfully execute a strategy that demonstrates profitability and a clear path to sustainable growth. In conclusion, Nuvve Holding Corp is facing a critical test. They have a chance to right the ship by the 31st of December, but it will require significant execution and likely favorable market conditions. Alright, that is our breakdown of Nuvve's urgent filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord link in the description for more community discussions. Thanks for watching. See you next time.